When Bitcoin gets to $10 million a coin, the volatility will be down around the level of gold, and you will have missed the opportunity of your lifetime, right? The volatility is the price you pay to outperform the S&P by a factor of 10 for 10 years straight, right? And the reason the volatility is there is because the entire world is coming to grips with a totally new paradigm shifting idea. And also because Bitcoin is plugged into the crypto economy. And the rest of the crypto economy is exchanges offshore trading with 20x leverage 24/7, 365 with thin liquidity and cross-collateralized altcoin. So you got to take the good with the bad, right? The good is this is the highest velocity, money you've ever seen in your life. The bad is it's volatile. The good is it outperformed the S&P by a factor of 10 every year for a decade. And so I would counsel anybody, if your number one concern is volatility, put your money in the dollar. And if you don't want to do that, you buy an index of S&P. Just buy the S&P index. It's a very conventional idea, but you're going to have returns that are going to be 1/10 of what you would get if you can strap in and take the volatility. I wouldn't buy Bitcoin for 10 minutes if you're not ready to hold it for 10 years. It's an old Warren Buffett quote, but it's still true with regard to this asset class. So the right way to think of it, Avi, is what percentage of your portfolio are you willing to save for a decade and bet on a long-term trend without checking the price every minute? And that part you ought to put into Bitcoin, because Bitcoin is big tech, with digital gold, right? It's gold perfected on a big tech network. But without the CEO, without the board of directors, without the product cycles, without the supply chains, without the employee base, it's just the idea of moving monetary value at the speed of light and programming it at the speed of a computer chip. That's what makes it rational. It was a new idea for institutional investors in August of last year when we bought our first $250 million position. But if you look at the last 12 months, this has been a 12 months of political turbulence and monetary inflation. Gold is down 7%. Bonds are down about 7%. The S&P index is up 34%. Bitcoin's up 350%, right? And all those macro investors and institutional investors have seen that gold doesn't work as an inflation hedge. You can see Bitcoin is digital gold. You can see that it's doing a better job of managing monetary inflation than just holding a market basket of equities. And I think that as you look forward, what people are beginning to realize is, first of all, it is digital gold. We just had a sitting senator of the United States on CNBC this week declare that loudly. It is digital gold. But digital gold was the idea, I take $1 billion and I put it into a metal as a bearer instrument and its non-sovereign store of value. The problem with gold is you can't lease it out and you can't move it very easily, and it's hard to mortgage it. And so a lot of people that wanted to do wealth preservation would buy $1 billion of buildings. They buy commercial real estate or property. Now, the idea of Bitcoin as digital gold is the beginning. The real big idea is digital property. What if I could buy $1 billion hotel in cyberspace and I could lease it out? And I could put a mortgage on it, and I could move it at the speed of light, and it had all the benefits of gold, all the benefits of a building, all the benefits of land, and you can't make any more of it. And if everybody on Earth desired this scarce asset, and if every technology company wanted to build this into their iPhone or their website or their fintech application, you would have something very interesting. And I think that right now, investors are realizing, much to their horror, gold doesn't work. They're realizing Bitcoin is digital gold. And now they're starting to realize, based upon the successes of Square and PayPal and Coinbase and Robinhood, that this is a lot more than digital gold. This is digital property, and it's a global phenomenon we have never seen in this world. If you have a 30-year mortgage on a house that is not marked to market and you're paying 2.5% interest and the monetary inflation rate is 15% a year, it's a screaming good idea to basically take the mortgage and buy high quality property. MicroStrategy's in the middle. We've got debt that's dated 5 to 7 years out. And our blended, our blended cost of the debt is like 1.5%. So it's very inexpensive debt, and it's not mark to market. We don't have margin loans. In fact, 1.7 billion of the debt isn't even secured against anything. There's no collateral. So I think that we have a very good low cost capital to get that leverage. And that's what allowed us to generate a $4 billion investment profit on the Bitcoin in the past 12 months. If you don't want to invest in, if you had $1 million and you get leverage interest in Bitcoin and Bitcoin doubles, you may quadruple your money, right? And if Bitcoin goes to zero, you lose the million. If you want to invest $1 million and Bitcoin doubles and you get another million, then that's a different proposition. I think that investors are pretty smart. You have a big portfolio. Do you want 1% exposure or 2% exposure? And do you want to leverage bet or not? There are a lot of people that would do calls and puts and futures and Bitcoin futures to get other types of leverage. The truth is we have investors that are invested in our derivatives. We have investors invested in the convertible note. We have investors invested in our senior secured debt, which yields 6 1/8% nominal interest. And we have investors invested in our equity. And I encourage all investors to go buy some Bitcoin, and they're all just different ways to get exposure to the asset class, depending upon your risk tolerance and your charter. How many people can go and borrow $1 billion at 0% interest? Because we did, right? So from a shareholder point of view, if I had a company that could borrow money at 0% interest and invest in something that's going up 400% a year, and then all I had to do was wait, it's a pretty good idea for the shareholder. Now, if you don't like Bitcoin, you shouldn't hold our shares, but we were very transparent about telegraphing what we were going to do. We told the market before we did it. Then when we did it, we bought back $250 million. We offered $250 million Dutch auction to let anybody out at a premium if they didn't like the strategy. And then after the Dutch auction, we kept with that strategy. And I don't think you could be more transparent and telegraph your moves in a more methodic way than we did. So I think that, in fact, I turn this around. It's irresponsible for a publicly traded company to hold billions of dollars of treasury reserve assets in USD or in short-dated sovereign debt if the negative real yield is minus 10, 20, or 30%. And right now, if I was a shareholder and I had a company that I was invested in with $100 billion in cash and the S&P went up 34% year over year, I would say that there's a minus 34% negative real yield on the cash. You burned $34 billion in 12 months. So that's really what's important from a shareholder point of view. You got to either give the cash back so that someone else can invest it in the S&P index, or you have to beat the index. And when you do that, you should do that with transparency and I think and integrity, and we did that.